You are watching Influence Media, PSI TV, the Netflix of biz brands.
My guest today is Brian G. Johnson. He has a math degree from Drexel University and spent 30 years investing in the stock market. In 2008, he won the World Cup Championship of stock trading. And the next year, he placed second. Now, he spent 9 years as a computer programmer, 19 years as a math tutor, and is a national speaker for the American Association of Individual Investors. In 2009, Brian started his own website, themoonrunreport.com, which he still hosts today. Now, remember that he was a math tutor and a computer programmer. That's going to come up a little bit later. All right. Brian, so glad to have you.
Thank you.
Awesome. Awesome. So, Brian, you have been the math solution for many struggling students for 19 plus years. To what extent do you think that math acumen helps you with understanding or analyzing the financial markets?
Well, first off, math is a very comprehensive type thing. I was tutoring, okay? I was tutoring kids from first grade to college. And what it entails is a wide range of concepts and analysis. And that helped me in the stock market because you have so many years to analyze in the stock market, and you need to find the right solution for picking it apart and getting what I have written in the book today. So it was a stepping stone into a far higher reaching type of thing. The stock market is very difficult and needs to be analyzed the right way.
Yes. Right now, I can tell you in my own experience doing statistics classes, the regression lines and all those kind of math concepts are a struggle for me. And so I can see how math can really help you understand probabilities and likelihoods and other things like that. I definitely get that. So, Brian, a 2018 quantitative research publication by Aren, and I'm saying that because I had to use that research paper recently, included this finding, and I quote, "However, there is uncertainty in financial markets, not risk. Risk is computable, but uncertainty is not a computable value with a mathematical model." So, Brian, what would you say is the relationship between risk and uncertainty?
Well, since you're saying that risk is computable, yes. And
that's what the research says. Aren's research paper, which I shared with you in the email. Yeah. Mm-hmm.
Okay, now what I do is I take the uncertainty away. I have four ways of determining a major sell signal by looking at the tsunami indicator, which I invented first, the 50 new lows rule, which comes next. I invented that in 2013. Also, the accelerating new lows concept, and then the shortable correction idea. And what I did is I have these four different major sell type of signals. And I can identify which ones are to be bear markets and which one are to be just a small decline. And I've been able to separate them using these four concepts. And that takes away the uncertainty. Basically, my timer is about 80% accurate, and the losses are not very significant if you look through the previous years.
Brian, you are a math genius. You have come up with, you use the word invented, you invented some trading signals.
Yes.
One of them is your PEP indicator, and you talk about your tsunami indicator. I've used indicators in the past. I've not seen these. I would love to have those.
The spreadsheet identifies all the signals, and it shows you all the metrics used to determine this.
Okay, so they don't show up on the trading chart. They show up in a spreadsheet.
Yes.
Okay, all right. Okay, so it's not a like a robot type signal then.
Well, what I do is I do use a spreadsheet, and every time I have a buy signal or a sell signal, I enter it into the spreadsheet and computes exactly what I should do.
And then that goes out to your subscribers.
Right.
Okay, so the market and even market segments are always switching between bull and bear signals. And theoretically, traders can make money in any market if they have the skill set. Now, your book on page 2, it says, and I quote, bull and bear markets come and go, and the art of determining when and how to invest can be difficult to master, end quote. So, Brian, to what extent would you say your book contributes to trading mastery?
Okay, my study started in 2006. I attended a mutual fund managers meeting, and he asked the audience if anybody can call major tops and major bottoms within 6 days. He had a job for him. So I went home, did my study, and then I sent it to him. And when I saw him the next time, I asked him if I had a job, and he said no. So I went and entered the World Cup Championship of Stock Trading 2008, where I called the crash in September, and I was able to take first place. I was up 48% that year. So through the years, it's been a long and long. I mean, every night, every day, you're concentrating, getting the signals right, getting the math correct, and just pounding away at the keyboard, staying up until 2, 3, 4 in the morning, that type of thing. This has taken me 16 years, and a completed version is now available. So I have been able to determine in precision my entry and exit signals. Now, what I do is have I buy stocks when the major buy signal comes in, and I trade them in and out as the rebalancing program shows me to do. And then at the major sell signal, I dump all my stocks and wait for the market to collapse. So in that way, I'm able to escalate my precision to 80% and accuracy. So that's how I do it.
So you're using your own computer program that you've made with your signals, and you're making trade decisions like your subscribers would, and you're getting this approximate 80%.
to do that successfully.
So you know what I'm gonna ask you, Brian, is because you are a math person primarily before all of this, there is a thought that math is a very logical mindset. And there's many trade books, many trade references, coaching that talks about the emotional side of trading. It sounds to me that your math foundation is helping you to stay in a more logical mind frame than the erratic, emotional crazy that does come with trading for a lot of people. I'm guilty. So I'm just throwing that out there. What do you think? Am I onto something on that?
Well, what gives my system so robust is because I've been able to hold on to stocks during a minor sell signal, and then the market retraces and goes back up again. And that's the idea, longer term holding periods than just trading in and out. So I have these periods like from say April 8th in 2020, I was able to buy stocks and then dump them in late 2021 as the market was topping out. Now, all this in and out trading can hamper your growth as an investor, because what I've been able to do is to get those high returns because I hold on to my stocks longer than just coming out at the most immediate downturn. So that's the key. And long-term holding is a nice idea, buy and hold or whatever. People quote Warren Buffett just to stay in there. But I would rather come out before a bear market hits. Okay. And before the Bear Strikes book has been successful in identifying these, and I've been able to give the best returns without coming out all the time.
For your subscribers. Sounds good. So Brian, as I was researching you, and I came across some Amazon reviews. Sounds like you have some fans, sounds like you have some haters. But I believe that sometimes it's simply a matter of the person who's reading the book may or may not be the ideal person that your book will help. And the hater tends to be someone who has an unspoken expectation that your book may not have met. So clarify who you think would be the best person that will get the most bang for their buck out of your book before the bear strikes, solution to bear markets and shortable corrections. Who would you say is the best person? Newbie trader, traders who are struggling? Who would be the best person?
So what I would be able to do is to help out people who are a little bit more experienced, are willing to be able to trade the markets, willing to use it see the market day by day, or just follow my signals. And also money managers who may want to say, well, okay, we're going to go through a downturn period here. Maybe we'll buy some puts, maybe we're going to sell out some stocks, that type of thing. But an idea of where the market's going and what the significant signals are in the market, and not just the flimsy signal that might occur with that may shake you out of the market, and then you have to get back in again, that type of thing. So I have the the right idea, I believe, and just staying in the market and then coming out during bear market periods.
Okay, so your book definitely is something that will, I think, help the reader who is a trader have a more mathematical and logical approach to the market, and they'll get some help with your book. But you do have a subscription program, because I would think that having read the book and being aware that you have these signals, that somebody may benefit from a little bit more hand holding to achieve the kind of results you're talking about. So tell us about your subscription or your program that you have.
Well, it's called the Moon Run Report, and the website address is www.moonrunreport.com. It's named after a little town west of Pittsburgh, where I live, little enclave. But what I have is signals that may appear during the week, and then I have a weekly update. So they get updated every Monday, and the small cap portfolios get updated every day. So just following the signals, getting the emails in the mail, and changing your position is all that needs to be done.
So is there anything else you'd like to share, Brian?
Well, I've been able to help out and instruct investors in the commentary, and the daily updates is exactly what I do. On the weekend, I give a short little summary of what I do. I trade a model. I am not worried about interest rates. I'm not worried about the economy. The stock market is one thing, and the economy is different. There are various things to go into the model, but I believe that everything is incorporated in price and the internals, and that's all I have to look at. So that's what I've been able to do, and helping out people in getting in the right direction in the market and not on the opposite side.
I like the sound of that, Brian. It sounds very simple, and simple is a great breath of fresh air to the complexity of trading. So I do think that's awesome. So, ladies and gentlemen, entrepreneurs, traders, whatever you are, if you're listening to this today, I'm going to invite you to check out moonrunreport.com. My guest, Brian G. Johnson, has a subscription program as well, so that if you happen to be trading and you're looking for a simple, logical system to know when to get in, when to get out, and to get the kind of results that Byran is accomplishing, this may be the program for you. And definitely you may want to get yourself a copy of the book before the bear strikes, Solutions to Bear Markets and Shortable Corrections, by my guest, Byran G. Johnson. Byran, thank you so much for being my guest today.
Thank you.